how to maximize your trading returns. Hi, this is Charlie giving you Saturday's video. And today I'm actually going to look at a spreadsheet we've got here with, as you can see, with a percent return each month and obviously giving an annualized return. And then we're going to put some starting capital in and then take it from there. So there are many ways to maximize your trading returns, of course, the trading itself, the nature of the trading, but I'm not going to go into sort of strategy type stuff here today and some of the technicals of trading, of course, because there are different ways of trading the market. So what we're going to focus on here today is, let's say you have a profitable strategy, a profitable overall approach to the market, and let's actually break that down into what it actually means. So let's take a starting capital of, let's say, $10,000, okay? So if I pump $10,000, oh, not 100,000, 10,000, Charlie. There we go. So if I put $10,000 in, then we can see the returns here every month based on the monthly return and what it gives you as an annualized return, and then what that would build into at the end of year one, the end of year two, etc., etc. Now, don't be naive enough to come down to the 10% and say, well, at 10% a month, then I'll be at my 10,000 will be at 31,000, and then it only takes me 5 years and I'm on 3 million. It's really if you did that, you'd be a Paul Tudor Jones, really, and to do that in the space of 5 years. So, because the reality is, anyone can, yes, make 10% a month, but to do it 5 years running consistently is almost impossible. And I'm probably going to invite some naive people to say, no, Charlie, it is possible. It is possible. You're right. But it's just such a small percentage of people that could achieve that. Because the reality is that, well, there's so many realities with this. One is that you might have a lovely little strategy which will deliver you 10% a month, trading on a 5-minute chart or whatever, but it's not scalable. The problem that a lot of people have in what they think they can achieve on a very small account, but once you scale up and once you go to larger sums, those strategies basically will stop working. So what you need to do is be a bit more realistic in your returns and accepting that not every year are you going to make, let's say, 5% a month every month for a year, or even it's not going to happen. You're going to have some years which will be bumper years, and then you'll have other years which will underperform, and then you've got this whole psychology stuff getting involved as well. Plus you've also got, can your strategy be scalable once you get it to sort of, let's say, $1 million plus? Is it actually, will it work at that level, or even at $500,000? And the smaller the time frame the strategy is off, then the less scalable it normally is. So what you want to be looking at is, okay, right, with my mindset, can I deal with an account compounding? Because you will get to a point somewhere along here. So let's say you were using the 5% a month. At some point along the scale here, you might get to a point where it hits $1 million in year 8. So, but somewhere along this line, you might find a natural level where you think, actually, I don't want to try and make 5% anymore, a month anymore. There's a lot of volatility that will come. In order to make 5% or 79% annualized return a year, there's quite a lot of volatility to get to 79%. Don't think that you just make that, the money will go up and down, and you will have plenty of drawdowns in order to make that 5% a month. Now, that's fine when you're trading on a 10,000 account, but when you're trading on 300,000 over here, it might not be so comfortable to see that 300,000 go drop by 80,000 and then go back up again. This is what I'm saying about the mindset, which is so important. And so it takes a certain kind of mindset to keep being able to trade that, because most people will find that natural level where they say, do you know what, I'm going to drop it now. I'm comfortable at 300,000. I'm not even going to try and go for that type of volatility anymore. I might be able to do it. It may be achievable still, but lots of people, myself included, got to a level whereby, do you know what, I don't want the volatility anymore in my main accounts. I want to be down at this end, this right at the top here. Very, very low volatility, lower returns, but I don't need the high returns anymore, and that's what tends to happen. Now, I say tends to happen because some people, certainly when you're younger, you're more aggressive. You don't look at it in the same way as maybe when you're older, and risk becomes more and more important. And so when you're younger, you're much more likely to be more aggressive, and so some people won't be affected and get to a natural level. Like I'm saying, I don't know, I've just cherry picked at 300,000 now, but some people won't get to that level. They'll actually say, no, carry on, don't mind seeing it swing around, drop 80,000, then all the way back up again. Whereas someone who a different person may not be comfortable with that anymore. So I'm just saying that I know the majority will get to a level, and everyone will have a different level. For one person, it might be when they get to 57,000 or 50 odd thousand. They've had a really good run. They've got their account up from 10,000 to 50,000 or 80 or 100,000, and then they find a level where they say, okay, I'm just going to drop the risk per trade a little bit now, because I'm really comfortable with that. So everybody's got a different. Not everybody in trading wants to be a multi millionaire. We have to remember that. And lots of people who get into trading initially think they want to become a millionaire, and then get to a point where they say, do you know what? I'm comfortable with where I'm at. So don't always naturally think that everybody has to become a millionaire from trading, because you will find a comfort level. Anyway, let's have a look through this. So now, of course, these returns, this is wonderful if you can achieve 1% every month, and that, of course, is very achievable. Beat the banks. Can you achieve 1% a month? Well, you'd be, if you did 1 month, that would be beating what you'd get on bank deposit, wouldn't it? So of course, these figures are. All of these figures are achievable, but to achieve the higher levels down here consistently is a lot more difficult, and year in, year out is a lot more difficult, like I've already said. So anyway, let's just pick some levels here anyway. We've put 10,000 in. So how can we really accelerate the returns outside of the actual trading element itself? I'm not going into that today. I've done a webinar recently about how to get more bang for your buck out of your trades. So this is just something a little bit different, and one that not everyone considers doing, and that is that if you have demonstrated to yourself that you are profitable, and that does not mean having to make money every single month. That is nonsense. Being profitable is about being profitable over a longer period of time, so over a 12-month period and longer. So of course, over a 12-month period, you could well be having losing months, and you highly likely will be. So it's not about that. It's about knowing that your approach to the market is overall profitable. Okay, and so once you're at that stage, don't always think about, yes, you're compounding, you're growing your account, but if you have a job or other sources of income, like lots of traders do consider adding to it. Well, why couldn't you add to your trading account to help compound those returns? So what we're going to do is we're going to stay on this 2% return. So we can see that after year 1 it goes to 12,000, at year 5 is at 32,000, and at year 8 here is at 66. So let's have a look and see what adding just $100 a month does to this. Wow. Okay. So look, I just spotted, what was year 5? I think it was at 32,000, and year 8 was at 66, and it's gone to 95, and it carries on. You can see that by year 10, this is quite a return. At year 10, 156,000 from a 10,000 starting point. So actually, let's get rid of that $100 again here. Let's see what that does to year 10 over here. So it's 107,000 versus 157,000. So you can see that just a small addition, once you're confident in what you're doing, and if you have the money to add, you can just get an idea of how much more quickly you can grow your account. So now, just by adding just $200 a month, and I appreciate not everyone can add $200 a month to their accounts, so I appreciate that, but it gives you an idea. Just at 200, it's practically doubled the return over a 10-year period. And that's just on an annualized return of 26%, which many traders, I've talked about returns for traders recently on a recent video on what is achievable, and that is more than achievable for an independent trader to make this sort of return. Now, you're not necessarily going to do it. Some years you'll do 50%, other years you might do 5% or whatever, but certainly this sort of return is more than achievable for many traders. So, and I think that where a lot of traders go wrong is that they haven't got the patience to wait to get you. When you think 10,000 into 200,000 in 10 years is a fantastic return, but most people haven't got the patience. They want to do it next week sort of thing. And so of course you can put in some stellar returns, and there'll be some years where you're going to get some 100% years and all sorts, certainly in the lower levels, but what in the main what you want is to be consistent. So you don't need to smash it out of the ballpark and make 100% every year. You might have the occasional year where you're going to have some really good returns, but you'll have some other years where you don't make much, or maybe even have a small losing year. But if you can be consistent, and then you're still in the game, so to speak, because you're not always trying to smash it out of the ballpark, then you can see the power of what you can achieve over a period there. And this is why I always say, see trading as a longer term exercise, because you can really start to see, looking at, even if you said, well, 5% a month. Well, 5% a month is, again, doing 60% a year, or this shows you the compounded return here, but doing 60% a year or so is a phenomenal return. But certainly it is achievable for a retail trader. Are you going to do it year in, year out, every single year? No, of course you're not, because like the reasons I've just said, if you can do 5% a month or 60% a year, uncompounded, but you're not going to do it year in, year out. There'll be some years that you'll do it, some years you might outperform that, and other years you'll underperform that. So it's not likely. So be realistic with yourself. Yes, you will be able to have months where you have some stellar months and some stellar years, but just allow yourself the opportunity to think, yeah, I probably won't do that every single year. So some of these lower returns are still very good, as I've already been saying. So there you go. There's some levels here that you can have a look at, and really what this is about is considering, once you know that you have the ability to trade well, and trading well does include losing and having losing months as well. But what I'm talking about is generally trading well, that you can make money from the markets. Well, if you have the additional money to be able to add to and contribute to your trading account, it just gets you further up the scale where you might want to be just that little bit quicker. Hopefully today's video has been of use to you. By all means, add some comments down in the box below, and give us a thumbs up if you like the videos, and do subscribe to the channel. Enjoy your Easter weekends for those of you who are enjoying the long weekend, and I'll see you soon. See you next week.